Okay, hey everybody, Dan Fitzpatrick here, stockmarketmentor.com, and this is Fitz in 5. Okay, I want to look at Eli Lilly today. I don't think there's anything to do on this stock. Don't get all lathered up. I don't think there's anything to do on this stock right now except watch it. And the reason I'm saying that is because, look, the stock's been in an uptrend. Just look at the 50-day moving average. 200-day as well. It's working really, really nicely. But you see the 50 start to kind of flatten out a little bit while, I'll just connect this. Hey, let's be efficient. While the 200-day moving average is just moving higher. And so these are starting to converge, which is actually a good thing if the uptrend is to be perpetuated. So with that said, what I'm waiting for here, this is just really simple. What I'm waiting for here is a move back above, we'll say 600. If this stock can get above 600 and close above 600, this is a stock that you absolutely, definitely want to put on your buy list because, for one thing, if you're buying it right around here, like let's say it closes above today's intraday high, we'll call it 602. If it closes above 602, then your risk, if you just put it down below the 50-day moving average and you don't want to own the stock if it falls back down that low, your risk is less than 4%. So that's a pretty good risk reward. It's a good way to start a position. So that's just something that you want to keep in mind. Generally speaking, and members, I go into a lot more detail on this. Generally speaking, the market is really, really running. You've got, I'll go into a little bit of detail. You've got the percentage of stocks above their 40-day moving average up at 72%. You've got the percentage of stocks above their 200-day up above 50%. These are all really bullish numbers, guys. And you've got the Qs hanging in there after a big run in November. So there's a lot of good things happening in the market. Semiconductors are hanging in there. Okay. Retail is starting to come up, and I got to see retail if I'm going to be a believer in a rally. And then I want to see the banks also going higher. How about the construction index, new high here? So when you really look at this, you have to be very, very constructive on the market. And to be saying, oh, but the market's due for a correction. It is. It is due for a correction. And we were due for a recession in 2023. And here we are. So things are behaving a little nonsensically. And that doesn't mean that you just throw caution to the wind and say, hey, man, buy them and ride them and we're all going to be rich by Thursday. Maybe that's the case, but it ain't going to be next Thursday. So you want to be using some prudence in what you're doing, but you definitely want to be adding, risk on. You want to be buying equities. You just want to be buying them right, which is what we do, by the way, in Stock Market Mentor every day. That's the focus, is making sure we get not just the right stocks, but we're getting them at the right time. So, okay, one other thing, and this is my members know this, our premium subscribers know this, but I'm telling you, I'm putting a link on this email, and that is to a session, a class that I'm teaching called Mentor Trading Mastery. There's a subtitle there, Getting to Stage 3, but I'm not going to tell you what that means. Anyway, I'm teaching it next Saturday. And if you want to register, it's really for members only, but what the hell? I've only been going for 4 minutes. If you want to register for that, you need to click on the link on this email. I think it's probably the only time I'm going to be just sending it out to everybody. I have been sending it out to members for a while, and we've got hundreds of people that are coming. So if you want to join that group, just click on the link on this email and register, okay? All right, that's all I got for you. You guys have a great weekend.